Hello traders, the title of the video is how to put back on track your Elliott wave count like a pro. Alright, do you want to put back on track your Elliott wave count, or have you noticed that your preliminary wave count is no more valid? Have you noticed that your preliminary wave count has now violated the Elliott wave principle? How can you put back on track your Elliott wave account like a pro? All right, let's get started. I have one example here. The financial instrument that we are analyzing is McDonald Corporation. All right. Epic MCD, Mike Charlie Delta. This is an American stock listed on the Dow 30. All right. So I still have on my chart my wave count here. And as I was looking at the chart, there are a lot of questions coming to my mind. And I'm trying to put back on track my Elliott wave account. All right, let's get started. So previously, you can see that this is what I call the first wave, the second wave, the third wave, and the fourth wave is a triangle A, B, C, D, E. All right, feel free to disagree with my wave count. And this was our fifth Elliott wave right there. Okay, fifth wave right there. Okay, at this point in time, I call this one the fifth wave. All right. And then, so which means fifth wave on the monthly chart. All right, hold on, please. I'm trying to do something here. All right, I'll leave it there for now. Okay. So my fifth wave, I'm going to place a vertical line there where what I was calling the fifth wave. Right there. Okay. Now, after the fifth wave, I have highlighted the pink line here, which is the 138.2% Fibonacci extension level of the fifth wave. I still got my Fibonacci extension tool. I apply it to the fifth wave right here, and I highlighted the 138.2% level. So you can see that I have this line here, the blue line, one move down, one move up, and I was expecting it to come down here. That's where we are now, okay? So that's where we are now at the pink line, okay? So what I was expecting here is a flat correction, especially the expanded flat correction, because the B part of the the expanded flat correction, the B part of the expanded flat correction will go to the 138.2% Fibonacci extension level of the fifth wave. All right, so where I place my vertical line, that's where the fifth wave has ended. Then I apply Fibonacci extension level to that, and I highlight the 138.2% Fibonacci extension level of that fifth wave, expecting a flat correction. Okay, the B part of a flat correction to end here. And my forecast was that when we reach the level of 15200, we will see the C part of the flat correction right here. Now, so far, everything looks good, all right? And the price can still come down in that zone because that's where we are now, okay? Now, if you look carefully, the price breaks above it, all right? But that candlestick bar here, which is the month of June 2017, okay, you close in 2 days, is not yet closed. It will be closed on the 30th of June, all right? So it's not completely wrong so far, but I start thinking and say, what will happen if the price continue to go up? Does it mean that my wave count is wrong, or can I put back on track my preliminary wave count? That's why we are recording this video today. So very often traders may count Elliott wave with the information that they got at that point in time. They can only count the wave as they did, but as the price continue to go up, revealing itself to us, so to speak, we may notice that maybe things has changed, and what we were labeling, or probably the third wave, may not be the third wave, and maybe, for instance, the first minor wave of the third wave itself. So how do you put back on track your preliminary wave count? This is the challenge here. And I have one practical example here that I want to show you. So far, everything is good. If, repeat, I'm choosing my well carefully here. If the price found a resistance here and continue to go down, it means that my preliminary wave count is valid, it's still valid. But as I see now going above the pink line, though that candlestick bar is not yet closed, I'll start thinking that if the price continue to go up, how can I put back on track my area wave count? That is the question. All right. So choosing my word again one more time carefully. Suppose the price continue to go up like this. All right, it goes up. Suppose it did something like this. All right, so hold on please. It did something like this. All right, it hasn't done it yet. All right, so but I'm preparing myself for it. All right, that's what you need to do. So suppose it did something like this. So suppose the price continue to go up, it went up a little bit above the peak line as we were expecting. It came down just a bit instead of forming the C part of the flat correction, but it pulled back a bit to retest the peak line and then continue to go up, exhibiting from here 1, 2, 3, 4, 5. In that case, we will say that all right, now the fifth wave has extended. But when we were here, we were correct to call this one a fifth wave, but we did not know that the fifth wave will be extended in this case, all right? But we are aware that it can be extended. But now, if it is extended, is our preliminary wave count still valid, all right? So choosing my word still one more time very carefully, all right? Suppose the price went up to this point, forming 1, 2, 3, 4, 5. That will constitute a fifth wave extension. Let's go back again to my preliminary wave count. So that will be first wave, second wave, third wave, fourth wave, all right, in pink, and then the fifth wave all the way up here. So if you look carefully, all right, the fifth wave will go up from here all the way up there. Now we have a third wave that is the shortest motive wave. According to the area wave principle, the third area wave in theory should not be the shortest impulse wave. So what do I mean by that? All right. So the first wave is an impulse wave, the third wave is an impulse wave, and the fifth wave is an impulse wave. When we compare the length of the first, the third, and the fifth wave, the third wave should not be the shortest wave. But now, if my fifth wave is extended, it's not yet extended. So far, my preliminary wave count is still holding nicely, provided that it found a resistance here and continue to go down. If the fifth wave is extended all the way up here, that will invalidate that third area wave. But it doesn't mean that my preliminary wave count was wrong, but it means that, okay, at that point in time, with the information that I had, I was correct to call this one the third area wave. But now, how do I put back on track my preliminary wave count? That is the question, all right? All right, so if, for instance, all right, we were here and we had the fifth wave, okay, extension, which is this what I say to trader, that whenever we label anything fifth wave, or we can think that that supposed to be fifth wave can be extended. When we label first wave, that supposed to be fifth wave can be extended. When we label anything third wave, that supposed to be third wave can be extended. So what we are originally calling first wave, third wave, or fifth wave can be the first minor wave of the real first or third or fifth wave. All right. But now I haven't answered your question yet. So, which means how do we put it back on track? All right. So if this fifth wave is extended, all right, I will have to look again on my first wave, all right, and say, okay, probably, George, the first wave has started here. Okay, so I will look again on my first wave. So I say, probably my first wave has started here, all right, instead of here, meaning that the first wave has started at the point where we have the surge in trading volume. But don't get carried away. Don't think that, okay, because your wave count is wrong, you cannot make profitable decision. Because as long as, all right, you are not violating the market pattern, you will be all right, okay? So now we see a surge in trading volume here. So now I'm saying, all right, if this fifth wave is extended, that will invalidate this third area wave. Therefore, probably, this may be our first wave, all right? Okay? Then I will say, all right, first wave, second wave, third wave, fourth wave, and the fifth wave that is extended. In that case, our third wave will become valid because it's no more the third area wave. So some trader may be laughing and say, Joe, you are start patching it now, all right? So, but the reason why I'm recording this video, if you have been counting wave, you will come across those challenges. That's why very often when I count my wave, I always leave the line on my chart. The reason is the price is printing something else out, I will be able to know how to put back on track my original wave count. I have known your finish because I'm going to go to the yearly chart and it will become more interesting. So I'm encouraging traders to watch the full length of this essential tutorial. All right. So you may say, George, all right, you are patching it. Okay, let's put it back here again and say, call this one the first wave. Okay, suppose we leave it here like this. Say, okay, I'm happy with, suppose you say, all right, I'm happy with my first wave. I don't want to put it back here where we have the surge in trading volume. Okay, so you say first wave, second wave. What is going on now? All right, what is going on now? So in that case, you will say that this is the first wave, this is the second wave. And now you will say, all right, George, what we were calling the third area wave, in fact, is the first minor wave of, okay, an extended third wave. Are you getting it? So this will be the first minor wave of the real third wave, and this will be the second minor wave of the real third wave, and our extended fifth wave will be what? The third minor wave of the real third wave. And then we will say that, all right, so therefore we will expect the fourth minor wave of the real third wave, followed by, okay, the fifth minor wave of the real third wave. And then we will expect the real fourth wave somewhere in this zone, followed by the real fifth wave that will go above it. I don't have enough room here, so what I will do, I will adjust my line so you can see. So we'll say, all right, fifth wave extended all the way here, somewhere there, all right? But that fifth wave is just the third minor wave of the real third wave, followed by the fourth minor wave of the third wave and the fifth minor wave of the third wave. So instead of having our third area wave ending here, we know now that this will be our first minor wave of the first wave, of the third wave, the second minor wave of the third wave, and the extension of the fifth wave, what we were calling fifth wave here, that is extended, will be called the third minor wave of the real third wave, followed by the fourth minor wave of the real third wave, and the fifth minor wave of the real third wave, and then we can talk about the fourth minor wave, okay, the real fourth minor wave, followed by, okay, so you need to adjust this a bit, okay, followed by the real fifth wave. And again, in all cases, whenever we call anything fifth or third, as you can see here, we call this one third wave, but now we have to readjust it because it's now the first minor wave of the third wave. You see now? So again here, as we are labeling this supposed to be real fifth wave, we need to again be prepared that that thing that we are calling a fifth wave at this junction can also be extended. Are you getting it now? But so far, my preliminary wave count, which is first wave, second wave, third wave, fourth wave, and fifth wave, is still valid because the price can still change direction here to form the C part of, okay, the flat correction. But in my mind, I will start preparing myself to the next scenario, which means what should I do to put my preliminary wave count back on track if the price continue to go up and form 1, 2, 3, 4, 5, okay, here In that case, we will go around. Either we may say, all right, we say. So then, okay, if you, all right, and then you put it like this. So you say, all right, probably this is the third mana wave of the third wave. Okay, fourth mana wave of the third wave, fifth mana wave. But once you have done it on a yearly chart, you need to be a little bit curious and say, will that make sense also on a yearly chart? Because we want to see the higher degree and the lower degree, yes or no. So by checking again the higher degree and the lower degree, we are calling the monthly chart as our lower degree in this case, because that's the time frame we are using first to count the wave. Now we are going to a higher time frame, which is the yearly chart, to count the wave on the higher degree. Now let's go to the yearly chart and see whether what I'm discussing here will make sense if this portion is extended. All right, let's go back quickly to the yearly chart. All right. So do not be, disappointed. Sometimes you may see that kind of conflict and you may be wondering, wow, my wave count is not correct. Another thing I need to mention here to trader, very often I see comment on other videos on YouTube when an Elliott wave practitioner will count wave and put it on YouTube, and trader will make all sorts of criticisms sometimes. Some of those criticisms may be valid, but most of them are not, because traders have forgotten that the Elliott wave count is dynamic, and we will also look at the lower degree and the higher degree, and also the infinity of the Elliott wave principle itself. All right, but don't worry about it too much, because as long as you are not violating the market pattern, you will be all right. Okay, so let's go. Now we are now on the yearly chart. We want to see the bigger picture. In that case, I will call this one the first wave of the higher degree. This one here. Okay, I'm running. I'll call it black as a black belt. Okay. The third down, okay, black belt. I will call this one, okay, the second wave of the higher degree. You remember, okay, you are with me, okay. So let's call it the second wave in dark green. Oops, okay, I have too many green now. So that's the dark green line. That's the second wave of a higher degree. So what's going on here? So let's look carefully into the price structure here of our third wave of a higher degree. So you may say, oh, first mana wave of a higher degree, second mana wave of the higher degree, and the third mana wave of the higher degree, and the fourth wave of the higher degree, and the fifth wave of the higher degree. But if you look carefully, you will see that there is an Elliott wave violation, because if you call this one the first mana wave of the third wave of a higher degree, and you call this one the third mana wave of the third wave of a higher degree, and you call this one the third mana wave of the real third wave of a higher degree, you will notice that this third mana wave of the real third wave of a higher degree is the shortest in comparison to the first, and also to the first, and also to the third. So this is an Elliott wave violation. Therefore, again, as I did it, you see now, as I did it on a monthly chart, this is not the third wave of a higher degree, is again the first mana wave of the third wave of a higher degree. So again, if I start again, I'll say first wave of a higher degree, second wave of a higher degree. All right. Now we will say that the third wave of a higher degree has been subdivided, okay, into a mana wave. All right. So you will say first mana wave of the real third wave of a higher degree, second mana wave of the third wave of a higher degree, but then this one will be the first mana wave. Are you getting it now? The first mana wave of the third mana wave of the real third wave of a higher degree. If you are confused, it's normal in this case, because I'm going to explain it to you one more time, okay? So, attention please. First wave of a higher degree, all right, let's put a vertical line there, no one will deny that. Second wave of a higher degree, no one will deny that. Now we are now in a third wave of a higher degree, okay? This is the first mana wave of that third wave of a higher degree. This is the second wave, the second mana wave of the real third wave of a higher degree, but this is not, this one here is not the third Manor wave of the real third wave of a higher degree, because the third Manor wave of the real third wave, all right, is also subdivided into 5 Manor waves. Are you still confused? All right. First Manor wave of the third wave of a higher degree, second Manor wave of the third wave of a higher degree, but this is the first Manor wave of the Manor wave of the real third wave of a higher degree. All right. Okay. Stay patient, please. Don't go away. All right. I will try to draw it and you will see it. Okay. So first wave. Suppose you have something like this. Okay. Second wave. Okay. Now we have a third wave. Okay. This is the third wave that starts now. That's the first Manor wave of the third wave. Yes or no? Okay. It's a complex third wave. It's the second Manor wave of that third wave. But now, if I go like this, okay, I'm going to do a third Manor wave of the third wave, and it's the fourth Manor wave of that third wave, okay? Okay, so it's an extended third wave. So first Manor wave of that third wave, second Manor wave of that third wave, or third Manor wave of that third wave, fourth Manor wave of that third wave, and fifth Manor wave of that third wave. Some trader already understood what I'm saying. So they may say, John, move on, please. But what I'm doing now, I'm trying to slow down for trader who did not already understand it. So you can do whatever you want to do. I mean, what I'm saying that you can do something else, okay, while I'm explaining this to a new traders, okay? Or you can skip the video a little bit forward and move on if you already know what I'm talking about, okay? All right, so now this is, okay, let's put a bit of color into it, all right? So you may understand what I'm trying to say to you here, because it's not as straightforward as it looks, because I believe there will be other traders out there that will be saying, Joe, you did not make any sense at all today. That's why I'm trying to draw all this line on my chart, okay? So here we are, all right? So, okay, all right? So we have the first wave of a higher degree, which is this one, all right? And then we have the second wave of a higher degree, this one here. Now, we are now in the third wave of a higher degree. And that third area wave is being subdivided into 5 Manor waves. Okay, 1, 2, 3, 4, 5. Okay, all right. But now, here there is a problem. There is a problem here which we see on the monthly chart, because if you label this third Manor wave of the third wave, there will be a problem, because there will be an Elliott wave violation, because the fifth wave and the first wave will be the longest, and the third wave will end up being the shortest. Therefore, what is happening is that, though this is the third Manor wave of the third wave, that third Manor wave of the third wave is also subdivided into 5. That's why it's becoming complicated, and I need to draw this line. So we have 2 Manor waves. First, we have the Manor waves of the third wave, and also we have the Manor wave of the Manor wave of the third wave. Then we have the Manor waves of the third Manor wave of the third wave. Okay, I need to move on now. I've said enough. I think if you don't understand, you have to watch the video 100 times until you understand it. So this section here, which is the third Manor wave of the third wave, is going to be subdivided into 5. This is what's happening here. And it's not easy for me to draw that on my chart here, because I don't have enough room to put it neatly on my chart. All right, I'll try my best But I think many traders will, at this point in time, will get the message. And once you get it, I'm happy. If not, then I don't know what to say to you anymore, okay? But most traders that are a little bit advanced, we already understand that. Okay, let's move things up a bit. Okay, Olivia's. Wow, it's not easy to draw on this chart. One, two, three, four, five. I'm getting there, traders. Stay patient. Okay, let's pause the video to avoid that it's too long. Then I'll come back to it and show you what I've done. Now, as you can see, so we are now in the third area wave. So this is the first minor wave of the third wave, second minor wave of the third wave, and this is the third minor wave of the third wave, and the fourth minor wave of the third wave, followed by the fifth minor wave of the third wave, and then we have the fourth wave and the fifth wave, all right? Now, what I was trying to explain to you is that the third minor wave of the third wave is also subdivided into 5. 1, 2, 3, 4, 5. So this is what's happening here. So first wave, second wave, third wave, all right? And then we have, okay, now first wave, second wave. Now we are in the third wave. So first minor wave of the third wave, all right? Second minor wave of the third wave. Now our third minor wave of the third wave is going to be subdivided into 5. 1, 2, 3, 4, 5. Provided that my current, repeat, provided that my current, okay, wave count, okay, does not hold, okay. So in that case, we'll have, all right, first minor wave of the third wave, second minor wave of the third wave, all right, and the third minor wave of the third wave, followed by the fourth minor wave of the third wave. If my previous forecast does not hold, we will be coming soon, okay. All right, this may be extended more. So we end up all the way there. Those are my previous lines, so all the way up there. And then the fifth, okay, minor wave, all right, of the third wave. So from here all the way up here, if my current wave count is not complete, which means the price did not come back down to form the C part of the flat correction, all right, from here all the way up here will be my third area wave of a higher degree. No, from here 1, 2, 3, 4, 5 will constitute the third minor wave of the real third wave. It's a bit complex, so don't all right, don't get too rigid with me, because this is a bit complex, all right. So if I go back again to my original higher degree wave count, that will be the first wave of a higher degree. This is the second wave of a higher degree. Now we are now in the third area wave. It's still going on, but that third area wave is also subdivided into 5 minor waves. First minor wave, second minor wave. But the third minor wave is also subdivided into 5. 1, 2, 3, 4, 5. Okay, that's the third minor wave, okay, of the third wave itself. From here all the way up here, that's the third minor wave, all right? So we are here. So first wave, second wave, third wave. Third wave has been subdivided into 5. First minor wave of the third wave, second minor wave of the third wave. But in this section here, all the way up there, we're going to have, okay, the third minor wave of the third wave. And that third minor wave of the third wave is going to be subdivided also into 5. 1, 2, 3, 4, 5. So from here all the way up there, that's the third minor wave of the real third wave, followed by the fourth minor wave, followed by the fourth minor wave of the third wave, and the fifth minor wave of the third wave. So we're going to have a very, very extended, okay, third wave, because the third minor wave of the third wave itself is also, okay, subdivided into 5. So this is the first minor wave of the third wave, second minor wave of the third wave, third minor wave of the third wave, fourth minor wave of the third wave, okay, a fifth minor wave of the third wave, followed by, okay, the real fourth wave and the real fifth wave. But if you look carefully, the third minor wave of the third wave is also subdivided into 5. An extension within an extension. The third wave itself of a higher degree has been extended, but also the third minor wave of that third wave is also subdivided. So this is how we can put our area wave count back on track. So this stock, if it breaks above the level of 152 and find a support and continue to go up to form, okay, the third, to complete the third minor wave of the real third wave, we are likely to see, okay, the price going up more. All right. All right. So first wave, second wave, and our third wave will go from here all the way up here, followed by the fourth wave and the real fifth wave. All right. But as you look carefully here, you can see that, okay, my third minor wave of the third wave is also subdivided into 5 minor waves. First minor wave of the third minor wave, okay, of the third wave has its second, all right, this is now the second minor wave of the third wave of a higher degree, all right? And this is the fifth minor wave of the third wave, the fifth minor wave of the third minor wave, all right, of a higher degree, all right? And the fourth minor wave of the third wave of a higher, the fourth minor wave of the third minor wave of a higher degree, all right, and the fifth minor wave of the third minor wave of a higher degree. So we have here 2 minor waves. The first one is the third minor wave of the real third wave, but that third minor wave of the real third wave has also first minor wave, second minor wave, third minor wave, fourth minor wave, and the fifth minor wave. That's why it's becoming a bit complex here. And this is exactly what is happening here. We have a third minor wave, but that third minor wave, right, is also subdivided into 5 minor wave. So what we are doing here, in order to put our area wave count back on track, we are looking at our previous wave count, our preliminary wave count, and we are asking question, what will happen if the price continue to go up here? If the price continue to go up here, that will invalidate our original, okay, third Elliott wave, which means our originally third wave will become the first minor wave, all right, of the real third wave, all right, and our second, all right, our originally fourth wave will become the second minor wave of the real third wave. Now, if the price continue to go up more, okay, we will have an extension of the third minor wave, of the real third wave. It's a double. Oh, I hope I have done a good job here. It's a double extension. Now, you can see, the reason why I'm dwelling on it, myself, I'm not satisfied with it. That's why I'm dwelling on it, okay? So the real third wave is extended, which means it formed of 1, 2, 3, 4, 5. So first minor wave, second minor wave, third minor wave, fourth minor wave, and the fifth minor wave of the real third wave. But as we are talking about the minor waves of the real third wave, it becomes more complex, okay, because the third minor wave of the real third wave is also subdivided into 5 minor waves. And this is what is happening here. My apology to new traders, because I believe a lot of experienced traders will already understand what I'm talking about here. So if you are a new trader and you think that, George, it has been a little bit confusing, my apology to you. All I would suggest is maybe to watch the video calmly and to pay attention to it when we have a double extension. The first, the real third wave of the higher degree has been extended, which means we have a group of minor waves. But not only that, the third minor wave among those minor waves has its own minor waves. So we have minor wave of a real third wave. Now, if you honestly, I would like traders to put a comment whether they truly get the message that I'm trying to communicate here for McDonald's stock, because the stock is looking increasingly bullish. If it continues to go up, as I was telling you now, it went up all the way up here, that will make the wave count more complex, especially to new traders, because we'll be talking about double extension when the real third wave is extended. But not only that, the third minor wave of the real third wave is also extended. So we have a double extension, 2 types of minor waves, one for the real third wave and one for the third minor wave of the real third wave. Are you still there? Are you still following me? All right. Or is it time to unsubscribe, George? Okay, let me know in the comment section. So that's it. So let me summarize this to you so you do not get confused completely. All right. So my previous wave count, all right, is still valid because so far the price is around $152. My previous forecast, if I leave it there so I do not forget, is that at this junction there's a high probability that we may have the C part of the flat correction. So this is the A part of the flat correction, this is the B part of the flat correction, and we will expect a kind of resistance around 152, bringing the price down to form the C part of the correction. But as you can see, as the price reaches that pink line, it's piercing through it without any resistance at all. Now the question I'm asking is that what will happen if the price continues to go up more? Will that invalidate my wave count? How can I put back my preliminary wave count? How can I put back on track my preliminary wave count? It doesn't mean that my preliminary wave count was wrong, but it's just the price is printing something new for us now, which I should take into consideration. I cannot ignore it. So sometimes all they will do, they will remove all the line. They will say, oh, my previous wave count was wrong. No, it was not wrong. It was correct at that point in time. But now you need to adjust it to the reality of the market, the current price structure. So all I'm doing is that what I was calling, if the price goes up, as I was telling you before, this will not be my third wave anymore. It will become the first Mano wave of the real third Elliott wave. Not only that, the third Mano wave of my real third wave will also be formed of 5 different Mano waves, making my wave count very complex. My original wave, third wave, has been extended, subdivided into 5 Mano waves: first Mano wave, second Mano wave, third Mano wave, fourth Mano wave, and the fifth Mano wave to complete my third Elliott wave. But to make matter more complex, my third Mano wave of the real third wave is also subdivided into 5 Mano wave. That 5 Mano wave is not yet completed in this case. It will be completed provided that the price finds support above the pink line and continue to go up one more time, which means 1, 2, 3, 4, 5. That will form the third Mano wave of our real third wave. And that third Mano wave, as you can see, will be subdivided into 5 Mano wave, bringing it up here. And then we'll have the fourth Mano wave of the real third wave, and then the fifth Mano wave of the real fourth wave, before we can even talk about the real fourth wave, followed by the fifth wave. And as always, when we call something a fifth or third or first, we will remember that those impulse waves can be extended. Before I wrap it up, after a long discussion, trying my best to clarify this complex subject, all right, there were some excellent questions recently. I forget the name of the trader. The trader was asking me a question about the wave extension. So he believes that normally if the first wave, or if one of the impulse wave has been extended, the other 2 may not be extended. No, that's not the case. All 3 impulse wave, meaning first, third, and fifth, can be extended. But generally, we can have one of them being extended and the other 2 not extended. This is one scenario. Usually, we see that very often is the third wave that is extended, and the first and the fifth are not extended. All right. Sometimes you may see that, all right, the third wave will be extended, and also the fifth wave will be extended. So 2 of those impulse waves will be extended. Very often you'll see that third wave and the fifth wave can be extended in the same trend. All right. All right. But we rarely see first, third, and fifth wave all together extended. Generally, you see 2 of those extended. You may also have the first wave extended and the third wave extended. Or you may have the first wave extended and the third wave is not extended, but the fifth wave may be extended. But we need to look again at our third Elliott wave so that we do not see any Elliott wave violation. If we see an Elliott wave violation, as if this price is, if the price continues to go out, then we're going to put back on track our original wave count. Truly, I would love to hear from traders their comment about this long discussion about how to put back on track your Elliott wave account when we are having a double extension. The third wave is extended. Now the third Mano wave of the real third wave is also extended. So we have many waves to come. Some of them are Mano wave of the original wave count. Some of them are Mano wave of a Mano wave. All right. Are you quitting the Elliott wave today? Is it too complex for you? All right. Or do you manage to understand, okay, what we are talking about here, all right? So watch it. If it's not clear, you may watch it second time. If it's too much for you, all right, you can leave it aside and come back another day, okay? Hopefully, if you watch it another time, it will become clearer to you, all right? So that is a possibility that we may have, okay, the third minor wave of the third wave being extended. But at this junction, we do not have it yet. We will have it only if the price finds support above the pink line and goes up one more time. Then we'll say, all right, the third minor wave of the real third wave has been extended. Then we will talk about the real fourth wave, followed by the fifth minor wave, followed by the fifth wave itself. Okay, okay. All right, before, so then we will have this is what I'm talking about. So the third, okay, the third minor wave of the third wave. All right, the extension of the third minor wave of the third wave will finish right here. You see, so when you go over it, it becomes again from here to here. That's the third minor wave. All right, of the third wave. All right. Then we have the fourth minor wave of the third wave and the fifth minor wave of the third wave. Then we will be talking about the real fourth wave followed by the real fifth wave. I will stop here before I confuse you more. Okay. So if you have any more questions, all right, let us know in the comment section, or any suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. But at this junction, we need to say priority to bullish signal above 15200 and priority to bearish signal below 15200. Will it print the C part of the original flat correction, or are we going to have a double extension in this case? All right. If you find this video, all right, confusing, useless, all right, let us know by giving us the thumbs up, all right. If you find it useful, all right, feel free to give us the thumbs up, all right. If you think that, okay, this video is an essential tutorial that may help other traders, feel free to share it on Google+, on Twitter, and also on Facebook. The extension of an extension is a complex subject, and very often traders may not see it. Sometimes you may notice that there is an Elliott wave violation. Whenever you notice there is an Elliott wave violation, think of extension of an extension. That can help you to quickly put back on track, okay, your preliminary wave count. When we call anything first, third, or fifth, just remember that it's possible that what we are originally calling, okay, fifth wave may become the first minor wave of the real fifth wave or real third wave or real first wave. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to put back on track your Elliott wave count like a pro. Have I derailed my original wave count, or have I put it back on track? Let us know in the comment section. Happy trading to you all, and speak to you soon.